you're an American living abroad, one thing hasn't changed. The United States still taxes you on your worldwide income. And every year around this time, I get the same question. Did anything major change for expats this year? The short answer is yes, but not in the way most people expect. A lot of the tax rules that were supposed to expire after 2025, they've now been extended or made permanent. So if you're relying on assumptions from a few years ago, this is a good time to reset. Let me walk you through what actually matters for 2026. First, personal exemptions are still gone. That's not new, but now it's permanent. The current tax brackets are also staying in place. We still have the 7-bracket system, topping out at 37%. Those rates were scheduled to sunset, but they didn't. So if you were expecting a big spike in tax rates this year, that's not happening. What is happening, though, are inflation adjustments, and that's where some numbers shift slightly. For 2026, the standard deduction increases. If you're married filing jointly, it's $32,200. Single is $16,100. Head of household is $24,150. It's not dramatic, but it does lower your taxable income a bit. And sometimes, that small bump is enough to affect whether you owe or receive a refund. The Foreign Earned Income Exclusion for returns is $130,000 for tax year 2025 income. For tax year 2026 income, it increases to $132,900. If both spouses qualify, you can potentially exclude over $265,000 combined. That sounds great, and for many people it is. But here's where strategy comes in. When you exclude income under the Foreign Earned Income Exclusion, that income doesn't count as compensation for IRA contributions. And depending on your situation, it can also limit the refundable portion of the child tax credit. In some cases, especially if you live in a higher tax country, using the foreign tax credit instead produces a better overall result. This is one of the biggest planning conversations we have with expats every year. The exclusion is powerful, but it's not automatically the best option. The foreign housing exclusion adjusts too. For 2026, the base housing amount is $21,264. Anything above that, up to your location's limit, may qualify. If you're living in a higher cost city like London, Singapore, or Dubai, your allowable housing amount could be significantly higher than the default cap, but the calculations have to be done correctly.